one of the things you learn as an operator who goes to become a VC is you don't quickly reject things, right? So VCs, especially who have not been operators, they're looking for stuff that's perfect, right? They want to find stuff that they don't feel like they're going to have to engage in because they've got 30 portfolio companies. They just need them to work. And if they're not working, they can't really spend a lot of time on them. I had a little bit of a different approach, which is not the right approach. And I've since learned it's more common than I thought, which is I looked at things and would say, I could fix that. Now, what I've learned is when it comes to business models, that is somewhat true. Like I feel like almost anything that you can find that's not working well on the operating side is fixable. That's not 100% true, but I would tell people every single company we've invested in has had some major go-to-market issue that needed adjusting. But what is really hard to fix is product. And what I won't do is get in a situation where a product is busted. And early on, because I am more product oriented, I was much more excited about the idea of dealing with products that might have some issues. Why is that? Well, you didn't have to pay as much for the company. I feel like I could fix it. Broken products are just really, I shouldn't say broken, suboptimized products is a better word. But that's one thing I've learned. The diligence side, is interesting. I think our diligence tends to be much more PE-like than VC-like. Which can be dangerous because the data, if you take the data for the companies this small and make too many assumptions, you can make bad decisions, and we have both ways. We've analyzed our way out of good investments. We've analyzed our way into bad investments. It's just how it goes when you look at data.